Hi guys, when I started forex trading, something very frustrating always happened, which is market easily hitting my stop loss and trading to my initial direction. That was really frustrating, and that kept happening until I understood this basic liquidity concept, which we're going to talk about in this video. Alright, so in this video you learn what liquidity is, the type of liquidity, and how to trade with liquidity. Okay, liquidity is basically where money lies in the market, and money lies at our stop losses and pending orders that we set at the highs and low. So if you set your stop loss here, there's money here. Your stop losses are here, there's money there. Above and below, there's money everywhere in the market. There's money everywhere in the market. Alright, so there are two types of liquidity. There's external range liquidity and internal range liquidity. External range liquidity is a swing high or swing low in form of buy side or sell side liquidity, while the internal range liquidity refers to the fair value gap and imbalance in the market, which price will always come to balance or mitigate before going back. Now let me explain. So external range liquidity is actually the impulsive side of the market, while the internal range is the corrective side of the market. So on a bullish trend, when the market is going up, if it retraces, it comes back into an internal range liquidity. When it breaks out of that low, of that high rather, it creates an external range liquidity. Whenever it goes up, it creates an external range, it comes into an internal range and takes out the external range. Same goes for the bearish trend. The bearish trend, it creates an external range liquidity at the low, retrace back up to an internal range liquidity at the fair value gap, the imbalance there, come back down to an external range liquidity, goes back up to an internal range liquidity. That's how it is basically. So to trade liquidity, you just need to understand, you just need to know the market structure. You need to know which structure you are in currently. Is it a bullish trend or a bearish? If it's a bullish trend, the higher high is your external range liquidity, while the lower low is your the higher low rather is your internal range liquidity. Whenever price goes up, price will always come down to trade. So you need to be watchful, you need to be mindful of this. Whenever price just go up, you don't need to rush to join the trend. You relax for price to come back down, then you enter. That's how it's done. Then also for a bearish trend, the lower low is the external range liquidity, while the lower high is the internal range liquidity. Price always go back to take out the internal range liquidity, come back to external range liquidity. So you just need to know the trend of the market you are on at that particular point. Yeah. So we can see how price took out this liquidity down here, this old low. Price took it out and then started moving up, creating external range liquidity. It took out that old low. Now there is a small fair value gap here, you can see. So there's a fair value gap here. Price came to mitigate before going up. So you can see price took out this old low here, this old low, then pushed up, taking out also external range liquidity above as well. So went up, came back down, and boom, started going up like that. And we can see now there's a fair value gap here too. Price came, mitigate it, and went up like so. Whenever price take out the external range liquidity based on a bullish trend, it will always come back to fill in the internal range liquidity. There's a fair value gap here. It will always come back to fill it in. You see nicely. It will always come back to fill it in. Price take out this one again, external range liquidity. It will come back. It will come back to fill the fair value gap here. This fair value gap.
the space between this candle and this candle. That's the fair value that this space comes back to fill it. Now we can see here as well. This is just basically what liquidity is all about. This is just basically what liquidity is all about. This is the daily time frame. Now we can see from here on the bearish trend, price took out the external range liquidity here. Price then went back to this internal range liquidity. You can see it. This happens often in the markets. This is just what liquidity is basically. Now price took out this one. Price took out this liquidity here, and now there's a small fair value gap here that price went back to mitigate. You see, so this is just basically what liquidity is all about. Basically what liquidity is all about: external range liquidity and internal range liquidity. Alright, thank you so much for watching. My name is Charles Ibeh. I hope you found this video helpful. Kindly like, subscribe, and turn on the bell notification for more amazing content like this. Bye.